I'm Nate Hoffman, and I am a modern loan advisor. I am licensed in Arizona, California, Nevada, Texas, and Florida. What's interesting about that is if you are working at a depository institution like a bank or a credit union, you operate under the license of the institution itself. As a non-depository lender or someone who doesn't have banking relationships, you have to be licensed in each individual state. And every state has different nuances with the laws that that state has, what different lending guidelines there are, what different programs are available. Property tax becomes a thing because in a state like California, where it's all 1.25% property tax, or somewhere like Texas, where you could go anywhere from 1% to 2.9%. Think about what that does on a $700,000 house. It gets difficult to qualify. And then insurance in Florida, when a lot of properties are not insurable or there are condos that are non-warrantable, there are a lot of things that you have to take into account. So as a loan officer, you look at credit, income, assets, property type. Those are the four fundamentals. And it's my job as your loan officer to guide you through the process and help navigate any landmines that might exist. Growing up in Arizona as a native Phoenician and then going to school in Wisconsin, getting my first job in Milwaukee, Wisconsin, and then bouncing all around while in aerospace and defense. I lived in Cincinnati, Seattle, DC, San Francisco, the Bay Area, Denver, and then Huntsville, Alabama for the last 6 years of my aerospace and defense career. And so while doing international sales, I did get this global perspective of culture and community, which I like to apply directly to my role as a loan advisor. As you evolve and grow within this industry, you learn that there are all different types of investors and all different types of ways to go through the loan process in ways that are enjoyable and that benefit you short and long term. And I think that there is a certain level of importance on the advisory aspect that is lost by so many. And so if you look at the way that our industry has changed from COVID, where there was a lot of volume, there were very low rates, people refinanced into those rates. You have what's now the lock-in effect of those low rates. But now we're on the other side of that from June of 2022 when the initial rate hike took place, and now we're 11 rate hikes later and still waiting for that rate relief. That has thinned out a lot of the professionals that were in the industry who didn't truly love what they were doing or who they were doing it for. And we're going to, moving forward, see a shift in a way where this job is more difficult, and it's going to separate those who truly love what they do and are continuing to evolve and learn and grow and identify different ways to help and staying up to date on new guidelines and new standards and new programs that may benefit people. And at the end of the day, knowing that I may not have the best product available for someone and referring that to someone that I know and trust within the industry, because this is a lifelong passion of mine that I'll do forever. And it's a very small community. And you think about it, there are billions, trillions of dollars that are involved in real estate. And with that being the case, it's still a very small community of knowing who is a consummate professional and who you should refer clients to, knowing that they'll be better taken care of. And that's just a rare characteristic that I embody. So I'm going through a loan right now that is a bank statement loan, non-qualified mortgage. It's a non-traditional type of loan for a gentleman who owns a couple of convenience stores, has a lot of deposits, excellent credit, 790 credit, and is currently renting for $1,800 a month. He's going into a $5,700 per month mortgage payment, and the particular investor that the loan was with, the underwriter, did not like the payment shock of going from an $1,800 a month rent payment to a $5,700 a month mortgage payment. But because of the resources that we have within American Pacific Mortgage and the dedication to a client's experience, the underwriting manager and the underwriter immediately called a meeting with myself and the file coordinator, put together a course of action because we do have delegated underwriting, which means our own internal underwriters are underwriting to the investor's guidelines. And so we were able to put together a solution, move the loan to a new investor, and still get the loan closed within that 7-day period. There's a certain level of acuity, knowledge, responsiveness, but ultimately just attention to a customer's needs and the ability of the team to rally and provide that level of support is just unbelievable and unheard of really throughout the industry. Within this line of work, there are a lot of ways that you can find a loan for a home purchase. You can go to a large mortgage lender like a bank, like Chase, Bank of America, Citi, Wells Fargo, that have very stringent regulations and guidelines. Bank of America requires you to have 3 separate accounts for you to qualify for a home loan. Chase does not allow for you to have more than 2 derogatory marks reporting on your credit. And these are all things you call in and then you feel deflated being told that you are denied for your mortgage loan application. So I have this fundamental understanding of what retail mortgage lending looks like. My mom has been a loan officer. She's at a local credit union. So I have a good understanding of what you receive in terms of value and service, but the phone only rings between 8 a.m. and 5 p.m. Monday through Friday. And if you think about it, if you are a hardworking person who is in the process of saving for a home purchase, you're probably going to be working during those hours. And the times that you are out looking at homes Saturday and Sunday and wondering if the numbers work to put it in an offer on one of these houses, you want the peace of mind to know that your loan officer is available for you. As a loan officer, my job is not to deny you. My job is to help prepare you for the underwriting process by getting the credit, the income, the asset documentation. Once a property is identified, making sure that we enter all of that information into the system, running an initial approval before then sending the package in front of an underwriter to see if you are creditworthy and whether the property is one that conforms with the lender's guidelines. Moral of the story is most everybody should buy a home, but no matter what, everyone should at least be open to the conversation just to see whether you are an existing homeowner or you are thinking about home ownership. Also, whether you are inheriting a property or you are going through a divorce, whatever life event you are going through, graduating from school, getting a new job, thinking about a move in careers. There are so many things that I see prevent people from having a conversation about what buying a home looks like because the misconception is that you immediately need to go out and find a home. Everything about a plan is starting on day one to figure out what that plan looks like. So give me a call, shoot me a text, send out a smoke signal. I promise to respond.